Welcome back to the exchange, and check out some of these crypto stats. Bitcoin is about to close out its best year since 2020. It's up more than 150%. It's giving a boost to companies like Marathon Digital, up more than 500%, and Riot Platforms nearly quintupling. MicroStrategy and Coinbase shares are quadrupled too this year. But will the Bitcoin-fueled boom continue into next year? Let's ask Coinbase CEO Brian Armstrong, who joins us now with our Kate Rooney. Welcome to both of you. Kate?
Hi, Kelly. Thanks so much. Brian, thank you for making time today. I want to start with some of the news this week. You're donating $1 million as part of this massive crypto super PAC in Washington, $78 million total for congressional races coming up next year. What kind of influence are you hoping to garner here?
Yeah, this has been a big moment for the crypto industry. So I personally donated, but so did a large number of other companies in the space, actually. So raising $78 million for a super PAC is a big milestone. The goal of that PAC is to elect pro-crypto and pro-innovation candidates in 2024. And there's 52 million Americans out there who have used crypto now. That's 5 times the number that have a union card. It's 3 times the number that have used an electric vehicle. And so this is a massive constituency, and they don't feel like their voices are being heard in D.C. So I think it's time to make sure that people know that being anti-crypto is just bad politics in D.C.
So speaking of D.C., Congress is one thing, Brian. Would support in that branch of the government be enough to leapfrog what's happening on the agency level? Take the SEC, for example, with lawsuits and what, frankly, really feels like animosity lately between that agency, at least, and Coinbase. Would congressional support be enough to offset that?
Congress could certainly help here. You're correct that we have not seen a very cooperative SEC. There's been a request for clear rules. Coinbase filed a formal petition to see some clear rules in the crypto industry on the areas of the law where it's not clear. And unfortunately, the SEC has been unwilling to do that. So we've asked a judge to compel them to respond to that. I think in the absence of the SEC acting, what we can see happen is Congress can go pass new legislation. And this is what we've seen 83% of the rest of the G20 countries go and do already. So the U.S. is actually kind of a little bit behind here. So Congress could act, the CFTC could step in, or the voters in 2024 could really send a clear message.
And the SEC is going to have last word when it comes to Bitcoin ETF approval. That does seem to be kind of priced in at this point. Kelly mentioned Bitcoin prices this year. Some have argued when it comes to Coinbase and sort of the impact, you can't trade ETFs on Coinbase. It could be a net negative, for example, if it ended up driving flows to places like Robinhood. How should investors think about the impact of an ETF on Coinbase?
Yeah, so I don't agree with that. I think the positive impact will be there for Coinbase and the industry writ large. One reason is that ETFs are going to bring in some new pools of capital into crypto from areas of the economy where people aren't able to directly trade crypto. The other important point to note is that Coinbase has been named as the custodian in, I think, all but one of those ETFs that have been filed. And so we're hoping to play a piece of that value chain as well.
Brian, it's Kelly here. If I could just pick up on that. And we've spoken with Mizuho's Dan Dolev a number of times on the program, who says, yeah, it'll be a headwind for Coinbase. He thinks people will move from the ETF, maybe move off your platform. And when I said, well, what if they don't? He said, well, to your point about the custodianship and all that, maybe it's a lower margin business. Can you talk about that? How profitable is kind of current, call it retail trading to Coinbase? And if you lose some of that, does what remain, is that less profitable?
Yeah, so whenever there's a new technology that comes on the scene or new product, you always kind of have to ask yourself, what percent is this a substitute for the thing that came before, and what percent is it a complement? And of course, it's usually never 100% one or the other. I think in this case, it's mostly a complement. You could say it's 80-20 one way or the other or something like that. But our goal with crypto is to get it plugged into all areas of the economy. We want the massive pools of capital out there that are in endowments and institutions, pension funds, they should all be able to participate in this new asset class. And so I think mostly it will be a complement. We'll see large new pools of capital come into crypto. I think that's part of why we've seen Bitcoin prices be up 90% year to date in anticipation of this. And there's also going to be a huge retail and institutional segment. They don't just want to own an ETF for Bitcoin. They want to actually own other crypto assets, or they want to earn staking rewards on their assets, or they want to actually participate in the crypto economy with stable coins and commerce and NFTs and Web3. And so those people are going to come to Coinbase and use our product directly as well. So Coinbase has a role to play in all aspects of the value chain here.
And Brian, finally, I want to ask you about higher interest rates and actually lower interest rates heading into next year. You've had to adjust as rates have risen and kind of taken a bite out of some of the trading activity. You've really pivoted, and now about a third of revenue, at least in Q3, was coming from interest income, excuse me, on stablecoin reserves. How are you going to adjust as we see interest rates potentially coming on the other side and falling next year? What's your strategy for adjusting the business in light of the macro environment?
Yeah, well, a few years ago, our business at Coinbase was 95% trading fees, and we made a big effort around the time we went public to start diversifying our revenue. And so we did manage to get more revenue streams in subscription and services, and the interest income from USD coin and stable coins was a big factor in the last few years. So what's great is that now we have multiple sources of revenue. Some of them in a high interest rate environment go up. Some of them in a low interest rate environment go up. So what that means is our revenue has started to become more predictable. That's helped us as a public company with our revenue multiples. It's been a really great story to tell Wall Street.